Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to preview the big markets, the movers and the shakers. We're going to take a look at a couple of the events that we're looking at for later this week. I think that it's going to be an interesting week on the markets. I don't necessarily think it's going to be a great one because we're sort of in the season. You know, 'tis the season to be merry. Well, it's not necessarily the season to be taking big risks, but the next 2 weeks, I think we need to be dialed in and ready to go. We've got a Fed meeting coming up on the 10th of December. That's big. 16th of December is going to have those aggregated jobs numbers from the past 2 months. And I can definitely see some area where we're going to potentially have some big-time movement in December. So there's one thing that I do want to highlight. When you get into the holiday seasons, and I got to show you this because I still remember it, but you don't necessarily get any action. Now, when you do get the action, it's typically dramatic, and it can be very, very difficult to deal with. And this is one of those things that happened. But we had a market crash back in 2018, and it was the Christmas Eve market crash. The market absolutely fell apart. Nobody was looking for it. Market crashed and then had a huge rebound after the Christmas opening. So, you know, we're sort of saying, okay, nothing's going to happen during the holidays, but a lot of times a lot happens. I think we're in for a big-time move. I think we're in for a big-time move. I think it comes in the next 10 days. It's going to be right after the Fed meeting and probably right before or right after those jobs numbers that we've been waiting on forever. So it seems to me that we've got a couple market drivers that could send the U.S. markets tumbling. Right now I'm watching crypto. Crypto, to me, is the big mover and shaker today, and you got some serious compression, some key levels that are coming your way. So I want to get into that. I also want to talk some crude oil. We got to talk a little bit about the stock market because it's sort of off to open December, but you know, we'll see how long that lasts. I'm not necessarily certain. So it's going to be back in the trading room. It's always a little bit difficult to start streaming after a break. It seems like we get out of practice really, really quickly. So I'll try to keep my thoughts in a row and not get sidetracked and go down any rabbit holes. But good to see everybody back. Tina's Jen, good to see you. Tina, welcome. Welcome to December's trade. Absolutely. T Marina, hi all. Happy Monday. Happy December. T, it's one of those where a lot of folks, a lot of the big money, spend their month counting theirs. They sit around, they say, well, I made this month, this last month, this for the year. And a lot of times, if you're a successful trader, December is basically just sort of an extended holiday. I'm confident everybody in this room will get there to where they don't have to do much in December. I think that'd be a nice thing, especially if you have friends and family and you want to go on holiday. There's nothing wrong with that at all. Steve Francis, good to see you. Ralph H., Andrea Garwal, Bobby Bob, good to see everybody back. Lita, good stuff. Tuku. Let's see, ND. Hey, Shane. Looking forward to your views on Bitcoin. Boy, do I have some views on Bitcoin. Ahmed, good to see you. Ahmed, welcome. All right, guys, let's get to crypto. That's what we're all thinking. Crypto's out there. It's far out, man. I mean, it's out there. When you take a look at what's happening in the Ether market, I'm going to start with Ether, and then we're going to go to Bitcoin. But Ether, the key level on my radar is last month's low. Last month's low, November's low, 26.21. That really could be where the fall apart starts, where the plunge starts, where the crash really begins. Because think of it this way. I've been long-term bullish for so long in crypto, I can't really remember when the last time I said sell. Bitcoin, definitely the case. We're bullish, bullish, bullish. We've got to start admitting what's happening, though. And we can't just sit there and say, well, the long-term trend's up and it'll go back up. I'm confident that crypto goes back up. And I see this pullback as a buying opportunity. But we can't be stupid. We have to use our heads and think and say, okay, that chart right there, what does that tell me? That's a monthly chart. We're working on our fourth negative month in a row. Has Elvis left the building? That is the real question. So when I look at something like Ether, I'm looking very closely at last month's low, and I'm saying that is a potential area where a lot of retail longs can get stopped out. Now, believe it or not, there are a lot of strategies out there that are based on time. There are things like buy the open, buy the electronic open, sell the electronic open, buy the first day of the month, sell the first day of the month. A lot of these are time-based. So when you see something like a monthly level coming into play, be ready. Be aware and be ready, and don't take it for granted that area, that's not special. More than likely, there's a lot of retail longs with their stop losses located right beneath 26.25 for Ethereum. If you trade beneath that zone, that is a very, very, very bearish sign. So right now, you're looking at about a 4-month loser. Pretty good scalping, really pretty good bullish scalping. You'll notice I don't have any indicators up. We're just looking at price and Fibonacci's. That swing low right there up to that spike high. And what do you have? You're right at 62%. That's absolutely huge. I cannot stress the importance of this level right here, 27.43, and then last month's low. Mark it on your chart and be exact. I'm not going to be exact. I'm just going to show you where it is. Mark that. Understand where that is, because when this market goes, when this 62% is finally gone and we trade beneath last month's low, we have to completely shift gears with Ether into the bear market. We have to really start saying, okay, we were up at 49 and we're about half of that now. Has Elvis left the building? Is it over? Are the good times really over? I'm looking at Ether, and part of me says get in there and buy it with both fists. I don't think I'm ready. I think I need more time. I think I want to see this order block down here at like 2,100 tested. I mean, this is potentially very, very ugly to the downside. So if you're holding Ethereum longs, I do not blame you. Believe me, I'm kind of on your side. I understand we have a long-term level there that's in play right now. 27.50 to 27.25 is in play right now. Okay. If it gives way and we trade beneath last month's low, we've got to be nimble and we've got to be smart, and we cannot make a bad mistake there where we don't need to make one. So definitely watch that for Ethereum. We'll talk about Bitcoin in a second. Remember, if you want to trade Ethereum or Bitcoin, head on over to Switch Markets. Black Friday sale still going on. This is Cyber Monday, so if you guys are going to spend some money online, don't spend too much. And if you're a brand new trader, they got some great bonuses for you over at Switch. And if you're a veteran trader, check in with them. See what they've got going for you. You might be able to make adjustments to your trading account, zero commission accounts, tight spreads, lots of markets. Right now we're working on a video for the gold-silver ratio. We've got a slew of videos coming out on the Switch Markets YouTube channel. Got a lot of great feedback on the last video that we put out that was on getting your free VPS and how to get set up with algo trading. So definitely check that one out if you've missed it. And that's over on Switch Markets on YouTube. Now, as far as what can we talk about today? Well, we started with Ether. I'm going to Bitcoin next. It's not as ugly for Bitcoin. It's ugly for Ether. It really, I mean, you're right now, you're at the line in the sand. I mean, it's 4th and 2, 4th and 3. Defense is dug in, and you're going to find out if this thing reverses or if you get stopped cold right there. I'm really worried about your Ethereum market right now. Very, very worried. So if I'm holding Ethereum longs, I can't tell you what to do, but just keep sight of what your goal is. If you're an investor, stick with it. If you're a trader, understand what those levels mean. They mean potential carnage. That's for sure. Let's see. I'm way behind on the live chat. Yeah, Tina, I see you working there. Bitcoin's coming next. ND. Tina Xing, what about the Euro US dollar? Please. I got in a small buy at 116.51 and in the red now. Yeah, we'll look at the Euro US dollar. More than happy to do that. Nico, hello, Shane. Hello, Nico. All caps. I love it. I love the enthusiasm. It's always good to be back. This time of year can really be challenging. It can really challenge our patience. It can challenge our attention and what we're going to be doing. So today, BOJ, we've got to talk about the BOJ. Big news there. We're going to look at our Fed watch, and then we're going to look at some betting odds that regard to the strike on Venezuela that I believe is holding up the crude oil market, and I believe that's one of the only things holding it up. All right, so we're going to take a look at Bitcoin. Bitcoin, here it is. Very, very similar formation, but very, very different than Ethereum. This is Ether. Notice the compression. Notice 62% Bitcoin. 78% of this current wave. Once 78% gives way, we're going lower. Now, I've been going back and forth with a veteran trader in the How to Trade community. Gentleman knows trading, understands, made a couple calls on Bitcoin. He was looking for 80 to the downside, maybe lower, maybe 75, 70. Yeah, start thinking that. It's time to start thinking that. Couple of things. Shane, is last month's low for Bitcoin as big of a deal as Ether? No, it's not. You can see this wick right here. It's nowhere near the compression. It's a little wicky here too, but you don't get that ratio where you jumped way back up into this range. It tells us there's bidders there, significant bidding there. But this area right here, last month's low, 80,537. Anything beneath 80,000 could be a real sell-off. I mean, a real pig roast. So you've got to watch it. You've got to be very careful down there. If you do see this area sort of not, I mean, right now I'm watching 85 like a hawk. If we don't get a daily close above 85, if we don't get any love to the top side in this market, more than likely you're going to go to 75. I can see that happening. I can see it happening by the end of the year. Now, the way that I replied and my views on Bitcoin were very simple. Shane, what do you think about Bitcoin? I said, well, I'm still bullish, and I could pull the long-term charts. We don't need to do that right now. I'm still bullish. I still like, challenging the 125 level, 150, 175. I see that potentially in 2026 when those interest rate expectations start going down, when we start cutting every meeting. I think that just the turnover of the FOMC and the Fed, those chairs are going to be filled with a lot of new faces. I think that's going to be bullish for crypto because, believe it or not, and I'm genuinely disinterested in anybody on CNBC that says interest rates don't drive big tech and they don't help crypto. That is nonsense. That's nonsense. The more money, the more cheap money that's out there, the greater the money supply. Typically, the more bullish your stocks are, typically the more bullish you are in your risk assets, and it doesn't get any riskier than crypto. So I'm definitely watching the top sides of these markets, but right now, the rubber's hitting the road, and it's hitting it hard for Bitcoin. 85 flat is under fire. If you do see that sell-off towards last month's low down around 80, yeah, and if you take out 80, 75. So I'm neutral right now. I was holding some shorts. I held some shorts that paid off pretty well in the contest. Talk about that in a little while. But I got out of them because we're at those key levels right now. I can make a case to buy longs and go long right now in crypto. I really can. But right now, I don't feel the entry points. We've got to wait. We've got to really, really wait and be patient and see how these areas sort themselves out. You're trading at two big ones for Ether and a big one for Bitcoin. 85 is a big, big deal. Am I bullish or bearish from here? My gut says buy it and just get out if things get bad. If I'm not already in, I'm not interested in going in right now, though. So if you're holding, be careful. Be careful holding this thing because it could really fall apart and we could go to 75 in a hurry. That's for sure. Brian, would December volume trickle out because of the end of the year in gold? Yeah, we got to look at gold too, Brian. Good point. Absolutely. There's a lot going on with gold. We saw the futures contract roll over. I believe, or what are we trading, the March contract now? Something like that. I believe that the edge is off of December. So this is going to be an interesting month for gold. We'll bring spot gold here towards the end of the session. We had a big rally that sort of was given back, and a lot of that, sort of predicated upon it being the first day of the month. First days of the month are always a challenge. December 1st, November 1st, January 1st, whatever. It's always an issue trading the first and last day of a month just because the institutions, they don't look at charts. They're watching the news. They're doing their strategies. Those are based on time. We had an analyst here, a trading coach here that a lot of the folks that have been with us for a while remember, Nick Quinn. He's elsewhere in the financial industry right now, but he worked at Lloyd's of London, and he'd sit there and he'd say, listen, a lot of what they did, they weren't looking at charts. And I'm thinking to myself, I go, if they weren't looking at charts, then they don't really care about much. They care about time, investment horizons, about getting the position executed in the market, and then potentially unwinding it at a certain point in time. And a lot of that is to cater to investors, and a lot of it's to make sure that their firm's bottom line looks the way it needs to look going into the next quarter. So when you talk about investment banks, it really is all about short-term and long-term liabilities, doing the dance between, okay, we're short-term risk averse or risk on, or long-term risk off. It's about making all those things work. And it's extremely advanced. It's huge money, and a lot of times it's based on the calendar. December's got an added importance because it's the end of the year. We don't know what's going on in the boardroom of a lot of these companies. We don't know about the hedge funds. Maybe certain hedge funds need to unwind positions in Bitcoin just to show some revenue, so maybe their corporate structure gets their bonuses. I mean, it sounds terrible, but that's the reality of it. So as a retail trader, when we're going to go for this ride, we got to know damn well all the market drivers that are involved. And when I take a look at Bitcoin and Ether, it looks to me, there's big time selling. There's no question about it. Is it profit taking or are these new shorts? In my view, it's profit taking towards the end of the year. That's my own opinion. I could be wrong. Like I said, I told the trader that I was speaking with earlier, I said, listen, Bitcoin for me is all about 100,000. If you get reestablished around 100,000 or above 100,000 by January 1st, boy, I could see a major, major rally in 2026. If you don't, you might get a compression year. Remember, timelines are tough. We can pick markets up and down, and we can do it with a lot of accuracy, but when these things move, that's what's tough. That's what's really difficult. So definitely want to be dialed in if you're trading crypto. Silver's crazy. Ahmed, I've never seen anything like it. Silver's printing 58 right now. We're making a video on the gold-silver ratio. It's probably going to be out way too late, but this silver boom up around 58 right now, up about 4%. You're seeing that gold-silver ratio, which was right around 100, come way down. It's coming way down. As a matter of fact, let's just go ahead and hit it real quick. We're trading 4,200 in gold, 42 divided by 58, which is the current price. This will give us a look. Let me see, 42. Let's go 4,200 and round it. Divided by 58. What is it? It's now 72. Gold-silver ratio is now 72, and that's absolutely staggering. It was at 100 earlier this year. It was at 100, about a month ago, 6 weeks ago. That's huge. Long-term averages are somewhere right around 50, 40 to 50. The people that bought silver, we talked a lot about holding silver. I know there's one of you in here that held silver, bought some silver, and was holding it based on some things we talked about last October. Maybe I will get into the fund manager business. That's where the big money is. That's for damn sure. All right, guys, let's go ahead and get into it. Nico, one question, then let's dive into some markets and go over our fundies and run through our progression for the week. All right, Nico, nothing special last week. Are you expecting good price action going into this week? No, not in particularly, but I'm ready. I'm ready. I don't see the huge moves or the huge market movers that we saw potentially in weeks past. Last week was a tough week because it was a holiday. I mean, there was probably more money traded on football games than there was in the markets. I'm just kidding. There's trillions in the markets. But what we need to be thinking about is what could drive the prices this week. There's a big market driver around there. That's Venezuela. We're going to talk about that. Also, the BOJ got involved and has driven the yen directional today. So those would be my two big movers and shakers this week on the Switch Markets newsletter. We're going to talk dollar yen. We're going to talk the VIX. We've got to look at the VIX. The VIX is sort of at low levels, but did open up 11% higher and has trickled down a little bit. And then we also got to talk about U.S. oil, definitely, for sure. Let me see, Ralph, are liquidity grabs a real thing? Yes, they are. Liquidity grabs, stop hunts. Here's one right here. I mean, what happened right there at 125? Now, a lot of folks here in Bitcoin, the smart money concept traders, I honestly don't have a problem with anybody that likes that methodology. It's not my cup of tea necessarily, but if you like it, go with it. And if you can trade it profitably, go with it. For me, a lot of folks are going to call that a liquidity grab. To me, that's just defending a big round number. And the problem I have with the smart money concepts like liquidity grab is like, okay, fine. So people went in there and they sold a bunch and they snagged all the action. They dominated the action, which essentially is what a liquidity grab is. Why did they do it? To me, it makes no difference to see, I looked at my chart and I see a big wick and I go, okay, that's a liquidity grab. I go, okay, why did that happen? All-time highs at 125. It was a real simple question, Ralph, for Bitcoin. The idea was, are we going to defend 125 or are we going to buy 125? And those big round numbers, those key levels are what bring the action to the market because we all have an opinion on them. Everybody has an opinion on them. Everybody has an opinion if the Patriots are going to win the Super Bowl or not. I don't think so. A lot of people believe that. If you're watching from New England, you're in that camp, right? What I'm saying is everybody has opinions from key levels, and that's what brings the action. So when you say liquidity grab, that really is one. We could also say it was a stop hunt right up above 125 before the reversal came in. There's no question about that. But why did it happen? All-time high was right at 125. 125 was the key level. That's where the action was, and that's what happened. So are they real? Yeah, I think they're real. Just understand why they develop key levels, market dynamics, things like that. But it's a great question, Ralph. And if the smart money stuff, if you guys like it, go with it. There's people out there that trade it and are profitable doing it. Just understand what you're doing. Stick to your guns. Proper risk management. That is absolutely key. Okay, we have some questions to go over, and then we'll dive in what we want to talk about today. I'm going to go ahead and pull up my Bollinger Bands and have the full repertoire of tools here to address these market questions. We had a Euro USD from Tina. Let's go ahead and take a look at it. The bid, the idea was 116. Let's see, what did you buy here? You bought 116.51s. Okay, remember, nothing that I say here is financial advice, and I will never, ever tell you to get out of a trade or get into a trade. That's not what we do here. We answer questions. We try to be a support system and just show you some of the things that I think and some of the things that I'm reading. Now, as far as the big picture, bullish, clearly bullish. I don't have any problem with that. And a lot of that has to do with the Fed interest rate expectations. Listen. What we're looking at here is a situation where you're going to cut interest rates all of a sudden, right? I still am skeptical, but we're a week out now. What are we, 7 days? I'll have FOMC live for you in 9 days. We are looking at an 88% chance of an interest rate cut. And that all developed after John Williams from the New York Fed stepped up to the plate and said, yeah, we think we may be able to adjust rates further. So what has that done to the dollar? Well, it's certainly hurt it. Now your dollar index is beneath 100. It's right around 99, but it hasn't hurt it that much. So when we start looking at interest rate expectations, what does all of it mean? When we're going to keep rates the same or hike rates, it makes for a stronger currency. If we're going to cut rates or reduce them, it makes for a weaker currency. So in this case, the Euro USD, the euro really is in position to rally against the dollar, especially if you get that December rate cut that was on the table, then off the table, then back on the table. So right now, I would be bullish. The trade in question was I got a small buy-in at 116.51. I don't hate it. If you're watching closely, though, Tina, the biggest thing I would point out is this has been a really difficult pair to trade for the last 5 weeks. November's range, very, very tight, extremely tight. So the first key level that you've got to have on your board is probably going to be last month's high, which is right there. That's an incredible key level. So 116.56. So essentially what you did was you bought in right in front of last month's high. I don't hate it. What happened though? High up there was what, 116.52. Okay, so one pip in your favor and then it reversed. It's okay. Believe me, the fight's not over. You're only down about 30 pips. So what you need to be thinking of now is, okay, what could be the scenario here? I'm not sure where your stop out points are, but here's what I would be looking at least from a weekly and a daily perspective. Okay, you traded above last week's high, got a nice break, and now you're sort of settling right back down on that 13-week EMA, which is a 116.07. Still bullish. I know it doesn't feel good because you're behind right now, but that's all right. Let's see if there's any hope. There's always hope. Okay, right here. Nice big rally. We sort of rejected that area right around 115.68, and then you rallied. I got a nice spike. Essentially, that was the run right there at the 13th of November's highs, which is 116.56, somewhere in that zone. So this is your double top. You've got that flat Bollinger Band that I talk about. When it flattens out like that, it means the market's moving sideways, and that's evident from the monthly chart. So you've got a rotational market on your hand. You don't really have a big trend breaking out. You're in early on a potential breakout. What you need to see for your trade to be successful is you need to see last month's high get taken out up above 116.56. If that happens, then you're going to be in pretty good shape. Then you have a lot of confidence. You say, okay, we're going to get a nice rally here. Now, if that doesn't happen, you got a bit of a challenge. You got a bit of a challenge ahead of you. So where do you cut this one off at? That's a good question. You've got sort of a 2-day range that's built here. What do you got? Something like that. So you're right around 116.15. You darn sure would love to keep your trade above that zone. 115.92. You'd love to stay bullish in this area. If not, you could be in for a bit of a ride. So just stick to your risk management. Go with your trade. It is what it is. The trade's down. I don't think it's a bad trade. You're just betting that you're going to rally and take out last month's high, which could potentially be a good thing. It could really put you in to a big win or maybe even a potential trend, maybe a couple trend days later this week. EU CPI is coming out a little bit later this week. We're going to cover that in just a second. That could help you or it could hurt you. Really just depends. But a challenging entry. You just needed to get that initial rush. But that's okay. There's still a lot of time left on the clock, that's for sure. Let me see. Brian Law, you wanted to take a look at gold. Will the volume leave? Let me see. Would December volume trickle out because it's the end of the year? Well, I mean, essentially, this is a good look at spot gold. Let's go ahead and take a look at what we have here with your gold market. We've got decent volume here, but that's already trading the March contract, February contract. So the new front month is February on the gold futures markets. Nobody's trading. Well, I mean, there are people trading December, but it's not as robust as it was. So when we're looking at gold, we're saying, okay, what does it mean? It means that, yeah, we are starting to look towards next spring. And that's important. That's important for a lot of reasons because right now your spot gold market and your gold futures market are sort of disjointed. Right now, gold futures front month, 42.73. Spot gold is at 42.39. In the agricultural markets, they call that basis, the difference between the futures contract price and the spot price. Not necessarily used as much in the gold market. Typically, we reference spot when we're trading the XAU pair. So that's what we're going to focus on. That's what most of you trade. Personally, I lean towards gold futures just because of the volatility. We did some tick scalping last week that was relatively successful using gold futures. So that was a lot of fun. Glad to do that. Big picture here. What does it all look like? Well, I mean, we had some macro levels that came into play back down there. Let's go ahead and take a look at those, sort of recap where we've been before we talk about where we're going. That was the retracement. You had really a nice, big, beautiful sort of pennant here. This was absolutely huge. This pennant right there, right around 3,500. We talked about it all summer. We knew once we broke, we were going high, very high. So right now to the top side, let's just get rid of all this technical analysis. 4,500 would be sort of my key level. So if I was looking at something up here, 45, no question. Absolutely no question. Dial it in. Coordinates, and we're going to be referencing this for the rest of the month. No, there's no question about it. So we're at 45. We've got an all-time high right here at 43.81. Definitely be aware of that too, 43.81, somewhere in that zone. It's important that these are accurate. So if you do enter these on your chart, be sure that they're accurate. Okay, so right there, what do you have? You got 43.81 and 45. Okay, that area right in there could potentially be topside resistance. It could generate maybe one of these things that we saw over the summer. Not likely, but possible. All right, 43.81. Maybe we sell a little bit from there, try to scalp. I'm not too keen on that. What I like is a nice short trade right up there in front of 45. Now, until we get there, are we bullish or bearish? Very bullish, very, very bullish. We saw sort of our pullback on the weekly chart. I'll go ahead and show you that again. Before I already erased all the technicals, but there it is. That was it. That was the pullback, the compression right at 39, and then we're just rocking higher by, about $250 an ounce. So what do we do now? Well, you had a big week last week, about 3.5 or 3.75%, and a lot of that was sort of predicated upon what? Trend line. Remember our trend line? We had this one drawn last week. Relatively simple. 2 touch points. Touch point 1, touch point 2, compression, break. Bullish the whole way, no questions. It's one of those things where you don't even question swinging at the pitch or taking the shot. I mean, it's there. So do we buy now? No, you can't really buy now. You could have played a breakout on that daily, and this, the market was closed on these days, 28th, 27th, 28th. Low liquidity, still very, very bullish. That's what I would call a low liquidity sweep. The market came in and was swept to the top side. Shouldn't really surprise anybody going into a weekend, especially given our news cycle. All right, so right there on a daily spike low, spike high pullback. Yeah, 41.75 is probably a pretty damn good buy right now. I wouldn't hesitate at all. Don't know that we get it. So in a word, that cup with handle that we drew wasn't real great. It's turning into be a pretty good trade right here. Boom, boom, right? Bullish. Will liquidity leave the market? Potentially. Hang tight, though. Expect solid liquidity for the next 2 weeks. We'll start talking about when it will dry up. And gold, it may not dry up. This is the one, guys. I mean, this is it. I mean, this is the silver market. I know that a lot of you remember that I'm not a very good artist. Never claimed to be. I do the best I can. So we're going to go with a real dirty illustration here. But I drew this last week for you. Cup with handle. Holy cow. That's why they call them patterns. One more time. Cup, handle, breakout, booyah. That's a big-time rally. That's 52 to 58, and that is no joke. 4 days, 3 sessions, 4 sessions. That's an explosion in the silver market. That's something that a lot of people really dream of. We talked back in October, right back in here, about the top side potentially for silver. Really a massive pullback right in this zone, and then since then, it's been absolutely fantastic. So if you're long silver, and I know there's a few folks that watch the stream, one in particular, congratulations. I mean, you made a lot of money on that thing. So well done. As far as where do we go now, we're top hunting. We're looking for a top. We don't know. And the biggest thing to remember about trending markets is they don't have to stop. That's a big misconception. I use a lot of sports analogies. That's sort of what I know. But I mean, it's like, okay, this team's up 50 to nothing. Can they win by 60 to nothing? Yeah, they can. They can win by 70 to nothing or 80 to nothing. There's no rules. Once the wheels are off, right now we're trying to find an area of fair value. We're trying to find an area where somebody wants to sell this thing. They're not there. 60 is the next one open. 60. Let's put our monthly up. You guys see what I'm getting at, and you know exactly what I'm going to say. $49s. See this? Double top right around 50. That was back in December of 79. June of 2011. 2 very, very big crisis periods, and we've absolutely shattered that. Now, a couple of things before we say the sky is falling and we're going into our next financial crisis. You can't tell that from a silver chart. Now, I can pull up a historical analysis and sit here like the people on CNBC do, like your silver broker. If you've ever talked to a silver broker, this is probably the pitch they've given you. Well, the last time silver was this high was in 1979. That was in a global stagflation, a global meltdown. And then at the big crisis of 2011, that's the last time silver was up. We've taken this out. We're in for the market crash and correction of the century. Maybe, maybe not. You've got to remember this. What was $49 worth in 1979? Should we look it up? Let's go. What was $49? What was $49 worth in 1979? In 2025, $49 in 1979 is the same purchasing power as $218. $218. That means if you were trading this silver at 49, that's what you're looking at. Is silver undervalued still at 60? Yep. Where's it going to go to? I don't know, but I'll tell you this. If we go into the rate cut cycle that we think we're going to go into in 2026, inflation is going to be very difficult to keep in the bag. And the only reason that it can be manageable is if the economy grows at a faster pace, people have better jobs, and they make more money. That's the only way that inflation will even remotely be livable. If those things aren't sustained, then you're in for an economic catastrophe. Now, if they are sustained, think Japan. Think Japan in the last 15 years, where everything sort of grows, including wages, and the debt load grows. The yen goes down, but there's more yen. So you could theoretically still afford something to eat. If that is the case, what is silver worth? I don't know. Is it worth $200 an ounce? Personally, I don't think it'll go that high. But we are on a collision course for 75 right now. Might get a hiccup at 60. It might be worth taking some short trades at 60. But a topside target, I mean, if you bought it from the low 20s, I mean, 75 is a massive move. If you want to just invest and hold it, is $100 out of the realm of possibility? And the answer is no. Remember, there are no rules, guys. There are no rules. Silver can go as high as it goes. I mean, if the quantum fund starts buying every ounce of silver on the market, and let's say the Chinese government decides that they don't want to export or they don't want to do anything with their reserves, it could go anywhere. By far the most fascinating market on the board. I could talk silver all day, and I'm a crude oil expert, but I could talk silver all day. I hope you guys made some money. I don't hope. I'm confident you guys made some money. Let's see. Let me see. Low volume today, eyes. Yeah, I mean, this is just a lazy Monday. Right now we're watching the markets just sort of muck around, except for crypto and silver. That's big. All right, let's see. Shane, will you please have a look at the EuroCAD? Absolutely. Let's take a look at the EuroCAD, and then we got to get on to a couple other things that we need to cover. I'll make it quick, though. Our fundamentals for this week and really the rest of the year are going to be fairly basic. We're not going to reinvent the wheel with them. They're going to be straightforward. But we do need to talk a little bit about what happened today and what to look for in the next 48 hours. You're welcome, Tina. Imagine holding since 79. What would you think, Ahmed, if you were holding silver since 79? It went up to 49. You bought it at 49. I mean, you really got your tail kicked, basically, just because inflation wiped you out. But that's just the way. Let me see. Ahmed, take a look at the Nikkei. I always love your analysis on. Okay, let's go EuroCAD, and then we'll look at the Nikkei. And then we got to dive into the dollar, yen, and U.S. oil, and that'll be a wrap. Two big stories, though, you need to watch for the next 48 hours. These are big. EuroCAD monthly chart, definitely an uptrend, no question about it. So the idea here for me is, okay, what is it? Is it the top or the bottom? I don't think it's the top. You've come a long, long way. So what do you have here? Nice big rally. And this is really with sort of crude oil hanging on at 60. We'll talk about crude oil in a minute. Crude oil always helps the Canadian dollar. And right now that's hanging out around $60. I'm still extremely bearish WTI crude, but we've got war pending, and wars typically prop oil prices up, that's for sure. So we're looking very, very closely here, and we're saying, okay, what can we potentially get done? And, the answer is relatively straightforward. We're in a flat market. If I'm a long-term investor here and I'm interested in holding, I'm holding longs. There's no question about it. I'm holding longs. Is this a good long entry? Well, it's a challenging long entry. You're going to need good risk management if you're going to buy from up here. If you're going to sell from up here, the stop out points pretty much are just this swing high and maybe last month's high. I think it's a questionable trade, though, fighting this big of a trend. Let's go to a weekly. Absolutely flat market. I mean, that's a point of control that's right around, 162.50. That's the hot level. You're trading right just above my 13-week EMA, which is at 116.20. Yeah, I mean, I honestly, I don't particularly, Nico, I'm not a real big fan of trading this thing. Let's go to a daily. Maybe we can find something on the daily. Yeah, I mean, look how flat this daily chart is with the Bollingers. That really screams rotation. One strategy that I've put out there in the past about Bollinger Bands, though, that can work for you. You can see right here, we hit that lower Bollinger Band. That was a heck of a buy. We hit the upper Bollinger Band. That was a heck of a sell. We hit the lower Bollinger Band. That was a buy. So I think that if you wanted a trade idea, until proven otherwise, I'd probably just sell the top of those daily Bollingers. 163 and a quarter, somewhere in there. That's not bad. I mean, that's pretty good living up there. Not too bad at all. So I would definitely be interested in potentially shorting that. Think rotation. Nico, think rotation. Don't think breakouts. Don't think trends. Don't think any of that. Think reversion to the mean. Think rotation. And if the market does break out, you get stopped out, and then we start trend trading, and that's a lot of fun. That's easy. We just wait for pullbacks and take them. Hope that helps a little bit for Euro CAD. That's a challenging market. That's one of those that you got to have the right strategy for that. Market's flat. Play reversion. That's the way to do that. Okay. All right, let's take a look at the Nikkei. I like the Nikkei. It's one of my favorites. Great volatility. The key levels in the Nikkei are my favorite. We had great key levels. 50 is a monster level right here on the daily. Take a look at 50,000. So right now, what have you traded the last 1, 2, 3, 4 sessions? 50,000. And you can see we sort of broke through it. It was topside resistance first, broke through it, and then we got the bids. The bidders were there, and then they weren't there. Then it was resistance again, and now are the bidders there or not? It looks like the sellers are in there. And the reason why is because the Japanese yen's getting stronger. We got to cover that before we sign off too. A big part of this is the Bank of Japan threatening to raise interest rates, which goes against everything that I thought was going to happen. But hey, sometimes we're wrong, and that's our advantage as being active traders, is we don't have to be right on everything. And when we're not right, that's okay. We can live with it. Let's go weekly. All right, given the situation with the Bank of Japan that I'm going to cover in a minute, what do you have here? Huge rally, nice bounce, and now you're just sort of flatlining. I would be approaching this market sort of, I mean, these markets you guys are giving me are not easy. I mean, these are difficult. We got to get into the tall grass here and start breaking down, chopping up what's happening. 50, I would always have 50,000 on my chart. You don't have to trade it, but you need to know where it is, and you'd be surprised when you put these key levels up just how much they come into play. All right, so there's 50,000, right? So 50,000 here. So if you do pull back, do I want to sell 49,796s? It's not a bad trade. It really isn't. I mean, I could sell 49.8s maybe, somewhere in there. 49.8 and a quarter, 50,000. Sort of bet that this zone right here is going to be resistance. It's not a terrible trade. Given what we've seen out of the Bank of Japan, you might want to play a little bit of a downside here in the Nikkei. Now, most people believe that the rate cut that we're going to talk about here in a second has already been baked into the cake. And if that's the case, then you want to get away from this type of thinking and look towards the long side of the market, which is that's going to be relatively straightforward. Monthly chart, you'll notice that we would absolutely love to get a pullback somewhere down in here. We're not going to get it, more than likely. We might get a little bit maybe for a week or two, but probably not. This zone right in here has been absolutely fantastic for us. Spike low there, right to your double top up there, right around 52.5. And what do you have? Right down in this golden zone. It's been a nice bottom twice. 50%'s been good. I'm not a 50% trader. If I was watching it to make a trade maybe today, 49,434 would be on my radar, potentially as being downside support. Still bullish, though. Still bullish until proven otherwise, but it's challenging. It's getting hard out there. The technical analysis is getting difficult. Those last two markets were not easy, probably not ones that I would be focusing on right now, but that's okay. If you guys are trading them, get in there and make some money. All right, learning purpose, good one. Thank you, learning. All right, Nico. So rotation is just trading in a consolidation and aiming the equilibrium of the range. Couldn't have said it better myself, Nico. That's a great way to put it. Rotation's trading in a consolidation pattern, which means we're moving from left to right on your charts, and we're not going up and down. We're moving sideways. That's all there is to it. Aiming for the equilibrium of the range. Absolutely. We're looking for the mean median value of the range. That's it. The established range, relatively straightforward, a lot of rectangles. You can look at swing highs and swing lows. Look at those. I use Bollinger's. Excuse me, voice cracked. I'm just growing up. I'm growing into a man. No, I use Bollinger Bands to figure out the rotational markets. When they're parallel, that's when we're looking to trade rotation. When they're wide open, we're looking to trade trends. All right, let's get into the nuts and bolts of this thing. I'm sort of way behind, I guess, on my progression here. Week 49. Monday, S&P Global PMIs. Those don't really mean anything. We'll look at the numbers here in a second. EU CPI jolts jobs tomorrow. So if you're trading that Euro USD, Tina, be careful. You're going to get that EU CPI number during the overnight. It could shake up the euro just a bit. Jolts jobs numbers, those could be key for tomorrow's session because remember, this week we should have NFP Friday and we do not because of the government shutdown. We're looking at the 16th of December. So all the normal jobs numbers that are going to come out on an NFP week, jolts jobs, ADP non-farm, jobless claims, weekly jobless claims, all those are back in play. But we're not going to get NFP. These jobs numbers have a potential to move the markets. We've got to be diligent about what's happening there. So definitely monitor them and see exactly what's going on. As far as Wednesday's ADP non-farm employment change, that could move the markets. That's an employment metric. We're also going to be looking at the EIA crude oil inventories. I'm fascinated to see where inventories stand after Thanksgiving. We'll talk more about that tomorrow. Thursday is going to be jobless claims. Jobless claims is going to be key because we're looking at initial jobless claims because we don't have any current jobs data. I can't stress that enough. This is the last set of jobs numbers that we're going to get before next week's Fed meeting. Typically, these numbers don't mean anything. JOLTS, ADP, job, they don't mean anything. We're waiting on NFP. These are going to mean something because we don't have any evidence. We don't have anything to go on. We don't have another NFP number. Be ready. Be ready for some of these Mickey Mouse numbers to move the markets. Be ready for it. As far as what we have out today, is, news of the day, S&P Global Manufacturing PMI. It's not that I'm too lazy to dig into these numbers. It's that I just don't care. And that's no offense to anybody working at the S&P Global. You're all a bunch of smart, professionals, and I like that. But these don't move the markets. They don't move the markets. I think there's more people watching these T-bills, treasuries, than these numbers. In any case, global manufacturing PMI, these are just manufacturing numbers, slightly above expectations, but not really meeting the previous release. It means less than nothing. ISM PMI, manufacturing PMI, 48.2. That's beneath expectations and the previous release. ISM manufacturing prices, 58.5. That's beneath what we expected, but above the previous. That's probably the only one I would give any weight to at all just because it speaks to inflation. But the next round of CPI data is going to square all that up for us. So I wouldn't get too carried away with this unless you want to be an economist. If you want to be an economist, then dive into these numbers and figure out exactly what they mean. And, go get the degree and give lectures on the ISM manufacturing PMI and the S&P Global manufacturing PMIs. If you enjoy that kind of work, more power to you. For me, it's not a market mover. Not today, at least. Maybe someday, maybe it will be. I don't know. BOE member spoke. Doesn't mean really anything. 3 and 6 month T-bills doesn't mean a heck of a lot, but a lot of folks watch this to find out where the long-term investment dollar is going here. 3 month T-bills came in at 3.725. Remember, these yields, as they rise, that means that we're expecting hawkish Fed policy and a smaller money supply. As they go down, we expect more money to be in the system and a dovish Fed. So for today, we saw yields fall week over week. We also saw the 6 month go a little bit down, not really much though. So these tick down a little bit, and those sort of reflect our interest rate expectations, which are now for a rate cut. So after the holidays, it's always sort of a challenge to get back in the saddle and begin trading. I would focus more on news this week. This would be the story that I would look at with regards to what can happen. Venezuela. Let's begin with BOJ, and then we'll get to Venezuela. The Bank of Japan considers a rate hike in December. Governor says yen and yields rise. This is big. This is really big for the yen because I've been saying for weeks, months, that you're going to see rate cuts out of the Bank of Japan. Well, they're talking about a rate hike because inflation is got to be borderline out of control. So here's what was said. The Bank of Japan governor, pardon my pronunciation, Ueda, said this yesterday, really during that Tokyo session. BOJ to weigh pros and cons of a rate hike in December. Rate hike is easing of accelerator, not applying the brakes. Yen bond yields rise as markets raise bets of a December hike. BOJ to offer more clarity on the distance from the neutral rate after the hike. So you pretty much already been told they're hiking this month. What that will do is that tightens the supply of yen, at least in the short term, and brought a little bit of selling to the U.S. dollar, Japanese yen. So this is interesting right here. The yen typically would get stronger in that situation. There's going to be less yen out there, so that means what? A stronger yen against the dollar, right? Well, what do you have here? You have an interesting monthly chart that I would be looking at, 153.15. That's only about 200 pips, or excuse me, somewhere in that, 200 pips, somewhere in that zone. You got an opportunity to get that trade this year, especially if the BOJ comes off hawkish in the coming weeks. That's going to be a big one. So I'm watching that. That would be my monthly level that I'd say, okay, if I get down around 153.50, 153 and a quarter, it's probably going to be time to start trading the yen to the top side. Now, as far as the short term goes, difficult to sort of look past a statement that's that hawkish, especially when it comes out of the BOJ. So when we're looking at something like this, you can see, okay, there's sort of the pullback. Is it already baked into the cake? Did somebody leak this before the holiday? Could have. Why else would you get that move? All right, and then right here you got sort of the coup de grace when they announced that, we're going to hike rates. I like the move from the BOJ. It didn't roil the markets too badly. It was one of those where they said, we're going to raise rates. What are you going to do about it? Get ready for it. The interesting thing was the citations that inflation was the big concern. That's hard. Inflation on the top side. Anytime the Bank of Japan's worried about inflation and doesn't see a devalued yen as really a good thing, that means the inflation situation is really bad. Keep an eye on it. So if we get that rate hike, which we're supposed to, potentially, if the BOJ says they're going to fight inflation even harder going into the new year, this pullback down to that 153.50 zone and 153.15 I just showed you, that's a pretty good one to bid. I think that could give us a great discount buy going into early 2026. I would love that. As far as what can we do right now, we can go to a 4-hour chart. We should have a nice big range to work with. Yeah, here it is. So that goes back to the 28th of November. Right there, you're going here, you're going spike high there on the 4-hour, spike low. You could work from this spike if you wanted to. I would go back to this range, and to be quite honest with you, I probably wouldn't be working with a 4-hour chart right now. And the reason why is you had the holidays, you had really no liquidity right in this zone. You had a little bit of action right back on the 27th, but again, this is tick volume. Excuse me, I can't speak today. This is tick volume, which means that on a day like the 27th, which was a holiday here in the United States, the liquidity is low, meaning the market depth. There's not as many traders in the market. And just because you got a big wide range for a 4-hour doesn't mean that there was a ton of volume that moved it. That just means there was a bunch of ticks. Probably that was a sweep. That's what I would call a sweep, a low liquidity sweep. Those are things that can really hurt you. If there's not enough buyers or sellers in the market, typically the market jumps around, and when it jumps around, it's really tough to trade. So in my view, that's where tick volumes really fall apart. Means less than nothing to me. This in here, though, this is more legitimate. This is sort of where we opened, had a little bit of a Friday, and this is where we opened today on the 1st of December. And not bad volume. We'll see exactly what develops. I wouldn't be trading a 4-hour chart here. If you wanted to, you could take this one from up here, 155.74-ish to the short. And the only reason I would say that's because you have 13-period EMA there as well. Interesting stuff. Definitely interesting stuff here for the dollar yen. Be very careful. All right, and the last story that we got to talk about is U.S. Venezuela. Is it ever going to happen? Well, it looks to me like it's going to happen, but nobody really knows when. Trump administration's pretty good at not telegraphing what they do militarily or really telegraphing what they do on a day-to-day basis. There's a lot of uncertainty out there. This is sort of the odds over at Polymarket. You're looking at about a no engagement at 53, and the rest of it for the rest of this month, it's about 47%. So about a 50-50 split that Venezuela's hit this month. But if you get into sort of the nuance down here, let's see, there was more. Well, never mind. I can't get to it right now. But in any case, it started to look like 70-30 by the end of January. So this looks to me like it's imminent. And if, in fact, it's imminent, then you're going to see a reaction out of the U.S. oil market. There it is. This is sort of what we're going to talk about on our Switch Markets Weekly Analytics. Check that out on Switch Markets YouTube. That one's going to drop for tomorrow's London session. And then also the newsletter will go out to all the Switch Markets clients that are on the list. You'll get that out to your email. And I'm building that out now, and that'll be in your email inbox by tomorrow, by tomorrow's London session. What we're looking at now is very simple. You're having a bullish week right here, a bullish open, 59.44, and that's because of the Venezuela strikes. Bottom line, that's what it's about. For me, I'm still bearish. A lot of people are laughing. I have friends that trade crude. They laugh at me. They go, "You still bearish, Shane? Or are you getting ready to start buying crude?" And I go, "No, I'm not buying crude." Now, if you guys are buying crude and you're scalping crude to the long, that's fantastic. Intraday trading, that's a completely different animal. We did some tick scalping last week. We hit our target. I showed you how fast and how quick and dirty that has to be for you to be successful doing it. If you're doing that, keep doing it. That's not what I'm talking about here. We could tick scalp crude all day long, and none of these charts, these weekly charts, aside from the key levels, have any really gravity. Now, this is interesting. We've got here sort of a losing streak. The market was pretty much going my way in this area. We got the big rally that shocked everybody in the middle of October. Basically, that's when we said, yeah, they're going to hit Venezuela. And then things started coming back down to normal. Now we've got about 2 weeks up, and this is clearly the markets are anticipating military strikes. A couple of things were said over the weekend. Trump declared Venezuela airspace closed. Legally, I don't believe, one president can do that to another country. But if I was in Venezuela, I would take that as a major, major hint to stay out of the sky, because there's going to be probably U.S. sorties, I would think, or U.S. aircraft running sorties there if they're not already. So that was one big announcement. The other one was that ground strikes were in the works, and that's another thing that Trump said. Interesting point. I mean, I think ground strikes probably means air to ground. I don't think you're talking ground invasion. If there's a ground invasion, you will see crude oil spike. I would say probably 70 to 72, depends on the gravity of those initial incursions, those initial battles, those kinetic exchanges. If they look significant and the U.S. takes casualties, this thing could go to the next level oil-wise. It really could. Now, I give that a very, very low probability of happening, very minute. More than likely, you're going to look at airstrikes, something very similar to what happened to Iran, or what the administration did to Iran earlier this year with Operation Midnight Hammer. I fully expect something like that, except instead of stealths, they're going to use F-35s more than likely, and they'll hit installations that are seen to be hostile. And what those will be is drug producing facilities, and we're waiting and seeing. That's a sort of a hillbilly way of saying it. We're waiting and seeing, but that's exactly what's happening. We're in wait and see mode. We don't really know when or how they're going to strike. We do have a pretty good idea that it's coming, but can we really wait around the rest of the month for it? No, you just trade oil as you normally would. For me, my trade stands. I'm looking for a bid down there somewhere just above 55, and we can get there in a session. We really can. 60 right now, we talked a lot about last week in the point of control and value areas and how big those key numbers really are. 60 is absolutely huge. That's called a point of control. And you'll notice we traded it, we broke down, we came back down, we dojied it, sold off, came back. What's the high right there? Was 59.64. Today we went right back up to 59.97. So 60 is big. We cannot seem to shake 60. That's a product of uncertainty and nobody really being willing to commit to the long or short side of crude oil. Very, very big deal there. As far as short-term trading, I would be irresponsible for giving you guys a trade, but I'm looking to short. Great trade location this weekly, probably pretty good. 60.50, pretty strong scalp. 59.18 was a pretty good short-term scalp there. 50%, right around $60 is a pretty good scalp. 60.49, though, there's nothing wrong with scalping to the short from up there. Just remember, if you get caught up in a news cycle, and there's supposed to be a press conference later today from the Trump administration directly addressing Venezuela, I don't think I would be going short right now. I don't think that would be the play, but that can work both ways. You might have a deal announced. You might have anything announced. We don't know. So we got to wait and see. And that makes crude oil really tough right now to trade. Definitely. All right, let's see. Ahmed, imagine how Powell looked like when he's given the speech of a rate cut. My Jay Powell impression. Okay, the Federal Open Market Committee, we decided to cut by 25 basis points. And it's going to be the biggest nothing burger of all time, this next FOMC Live. Honestly, I might just bring some champagne and sit here and sip champagne and critique Jay Powell, because everything he does as a person that he's on the way out. He's absolutely on the way out of the Fed. He knows it. He's just got to go up there and take one last dose from the media. He has to try to explain something that he really can't explain. You cannot cut interest rates right now, given the state of inflation. I've never said that they should be looking at what the BOJ is doing. Maybe they should. But a rate cut right now with inflation as entrenched as it is, everybody knows that's a bad idea for pricing stability. I just don't know how they put the inflation back and the rabbit back in the hat. We knew during COVID that the game had fundamentally changed. Every American started getting money sent out to him, stimulus checks, loans hit the market, 0% home loans were all the fad. And now you have so much money in the system. The system has grown. The monetary system has grown to such a level. It's going to be almost impossible to shrink that without a bunch of folks getting hurt really bad. And politically, that's suicide. So they're not going to do it. They're going to try to grow their way out of this problem, which I've been hypercritical about the Trump administration on that idea. You know, just like most Americans support some things, don't support other things. But it's to be real honest with you, it's not a product of anybody's policies. It's the product of the last 30 years of monetary policy. The idea has been to inflate away debt. Think about it. If you put a bunch of money on the street and you have a $40 trillion sovereign debt and you've got a $3 trillion interest service on this thing every year or whatever it is, you put a bunch of money in the market and you swell your GDP to sites that you've never seen. You say, well, see, we're still operating at a bonus, at a positive. We're still operating at a positive. Why? Because we're worth so much. So who cares if we owe 40 trillion? We're worth, 700 trillion or something. That's the way that it works. That's the way that's real estate 101. That's what it is. So that it is. I'll have a glass of water with you, Shane. Yeah, I'll have a glass of water, 2T. If I'm sitting here, if I'm trading, yeah, it's probably a no-fly zone on the champagne. We'll save that for New Year's. How's that? All right, everybody, that's enough for me from today. We went about an hour, but it was good to get back in the saddle and start looking at some of these things. Remember, Black Friday specials are still going on over at Switch. If you're a brand new trader, get on over there. They've got bonuses. Get on them. You got 4 days left of this special. Pretty good one. They're excited about it. I'm in the back office. Talked to several folks back there that are excited to get a bunch of new traders up and running and support the ones that are there. That's what this is all about. So if you have any questions at all, be sure to ask me. Reach out to me. You can reach out to me directly over at howtotrade.com. Send me a private message. You can follow me at X, ShaneV_trader. You can send me a private message there, and I'll get back to you. I'm not on X very much, just a couple times a day, but usually I post 2 or 3 things in real time as they happen, our trade idea and things of that nature. All right, everybody. I'm going to go ahead and sign off. You have a fantastic trading day. Trade the action well, and we'll talk soon. See you.